Hi, I'm Norma Guardado, a real estate agent in the San Francisco Bay Area, and I'm here today with Sergio Szyrko. Sergio is a mortgage lender with Fairway Mortgage. Hi, Sergio.
Hi, Norma. Thank you very much for having me. It's a pleasure.
Something that people are interested in knowing is about the interest rates, how the situation is changing, how they're being affected, and what is expected. What do you think about the current situation?
Yeah, there's a lot that we could go over in the next few minutes here. I think it would be good to start real quick about the reason why it's good to buy a home. You know, I always like when I do seminars and talk to clients, the main reason why we want to buy a home is, you know, you either have to pay rent typically where you live, or you're going to have a mortgage, you know. So if you look at what's happening with the rents lately in the last 2-3 years, there's been a lot of, you know, with the inflation now going up and the cost of living, rents have been going up as well. I'm hearing, you know, from a lot of clients that are paying rent that their landlord's been increasing the last year or two. And we think this is going to continue for some time. So if you start to add up how much you pay in rent and, you know, over 1 year, over 3 years, over 10 years, you pay a lot of money, really. And when you start to compare owning a home and paying a mortgage and locking in that payment and helping yourself instead of your landlord, it makes a big difference. So I think, you know, when buyers are looking to purchase for the first time, especially, you have to really do that calculation and see, okay, if I continue to pay rent, I might pay hundreds of thousands of dollars over the next few years, and versus buying a home, owning a home, and building equity over time to help yourself in 5 or 10 or 20 years. So that being said, you know, we definitely have to talk about the market conditions. I want to also get into like some of the details on qualifying, because there's some misconceptions on why what it takes to get into a home and into a loan program. So can we talk about that real quick, about the like down payment and credit scores and things?
Tell us what is normally a good credit score?
Oh, that's a great question. So that's a common question. We always get buyers that are a little bit nervous sometimes when they don't think their credit's perfect to qualify. And I say, you know, at any point, you should always talk to a loan officer, even if you think your credit is low, because you might get some advice that you didn't even think of. But to talk about actual credit scores, minimum in most programs, I mean, FHA actually allows up to as low as 580. Most conventional loan programs, you're probably going to be around 620. So you don't have to have like a 700 or 800 credit score like some people think to get in to a mortgage. You know, you could be in the high 500s, low 600s and still get a pretty good loan, fixed rate, good rate, and not have to wait until the credit is higher, basically.
What about the down payment? Do people need down payment? Is it required 20% down payment?
Yeah, that's another great question, because a lot of people ask that, and they think they limit themselves on waiting until they have more money because they think they need a large down payment, 20% or more, to get in. The reality is, no, there's a lot of programs that are set up and structured where buyers could get in with low down payments, as low as like 3% down for a conventional loan or 3.5% down for an FHA loan. Those are the most common programs. And actually, a lot of the first-time buyers we help don't come in with 20 or 30 or 50% down. They're usually giving a low down payment. So it's very common. And the main message is to not wait. You know, if you have a little bit of savings, some maybe help you could get from family, 401k, you know, funds that you could put together for a small down payment, usually that's enough to get you in. So that's when you should talk to a loan officer and like structure all that and see what the possibilities will be.
There's a lot of different payment assistance programs. So can you tell us a little bit about it?
Yes, of course. So the reality is, in some cases, there are people that don't have savings, they don't have money in their 401k, they can't get gift funds from family. So the next solution is to start looking at down payment assistance programs. And there's a lot of programs. There's a few in the state of California here. There's some national programs. So it's up to the loan officer and the lender to start narrowing down those best options. There's a great program right now from Cal HFA, the largest down payment provider in the down payment assistance provider in California. And they actually give up to 10% down payment as a grant. and it's an amazing program. There are some qualifications, so it's not for everybody. There's income limits, and there's a minimum credit score of 640 for that program for FHA. But what happens is if you get into the home and you buy it and you live in it for at least 5 years, then the 10% is forgiven. So it's amazing because you could get in with very little out of pocket. They give you almost all the money you need to get in with the down payment and the closing costs. And after a while, they forgive that money that they gave you after 5 years. So there are a lot of programs like that we just need to see what the client qualifies for and get them ready for that.
Right. Every client is different, so every client is a different situation. So not because their family, like you've said before, like family members, they don't have the same situation. They have different credit scores, they have different down payments, they have different backgrounds, meaning different financial situations. So every situation is unique. Therefore, they have to contact you to make sure that they are on the right path to be able to qualify for a loan to get their house.
That is correct. And the thing I always say, it's difficult because I know people get excited when they're, talking to relatives or friends or coworkers that have purchased a home, and they start to compare the situation like, oh, well, they got a, 3.5% rate a year ago or something, or 3% rate, and they got under this program. So every single situation is unique. And we, as a good lender, you have to, really narrow down the best options for the clients. And sometimes it's different than what their friend got, or their relative. So yes, every situation is definitely very specific to a person's qualifications.
Talking about rates, can you let us know about rates and market conditions?
Absolutely. So what happened was, and I think it's no secret now that mortgage rates have gone up. It started happening actually late last year in 2021, around December, just in time for the holidays. We started seeing rates climb up a little bit. And this is after, when the pandemic hit, the Federal Reserve started pumping money into the economy to artificially keep rates low. And I think a lot of people got excited, after the first couple months of everybody figuring out what's going on with the real estate market. There's the big wave of buyers that came and taking advantage of these low rates that historically we've never seen. So there, over the last couple of years, the real estate market was extremely hot, record high appreciation numbers. And that led a lot of people to start outbidding one another. There was a lot of competition on the buyer side. There was a lot of, loan programs that were with really low rates that we've never seen. So naturally, that party had to end a little bit. The Federal Reserve has been starting to increase rates because they want to slow down the economy and all that spending and the inflation more than anything. So what we've seen is mortgage rates probably on average now, we're probably in the mid 5% range. And that's normal, historically speaking, it's still a very good range. There's times when I got in the business, we were still seeing 7-8% rates at sometimes, 6%, 5.5%, so it's still not a terrible rate. But it's reality. We just have to, the things balance out one way or another. And now it's a matter of, seeing what is the best option and solution, even given the current market. I personally think it's still an excellent time to buy because, like I said in the beginning, if you look at long term, the benefits of owning outweigh the benefits of or the reality of renting when you compare side by side. So it's always a great time to buy. And if there's less competition now, and amongst buyers, and if there's a little bit more wiggle room with some sellers, it's perfect. It's kind of what a lot of people have been wanting the last few months, with less competition and maybe some negotiation that could happen with the sellers as well.
Yes, and besides the great negotiations, there's also good benefits right now. For example, the buy down program. Can you explain us about it?
Yes, the buy down program, this is something it's been around for many years, and it is something that was not really used when it's a seller's market, if that makes sense. So when there's buyers competing and you can't really negotiate, the sellers weren't really willing to help the buyers much with like closing cost credit or any kind of credit to or reduction in price. One thing that's come up in this situation, because the rates are higher than they were a few months ago, and the sellers are maybe more willing to help in some cases when their property hasn't sold yet. What we've seen is, I'm going to share this example here. 1 second. Okay, so I'm going to just show this example. It's 30-year fixed rate. A 2-1 buy down is the name, or temporary buy down. And 2-1 just means it's for 2 years, and 1 year at a time it'll change. So you know, in a normal situation, you could get in on a 30-year fixed loan. Let's say it's 600,000 at a 5.49 rate, just using rough numbers here. On a 30-year fix, you're going to have fixed payments the whole way through. So from day one, you're going to pay about 3,400 a month, and on the loan itself. And from there, you know, it won't change for this whole 30 years. If we do a buy down, then the seller will help reduce that for the first couple of years. And what happens is the first year it'll be a 3.49 rate because it goes down 2%. And the second year it goes down by, I mean, it goes up by 1%. The third year it gets back to normal where it would have been from the beginning on this one. So what it does is it helps the buyer get in with a lower payment for the first couple of years, and it eases them into that payment. So basically it's $700 less a month here and about $366 less the second year. The third year, it's back to where it started. So, you know, at that point, it's basically giving them a little cushion for the first year, if that makes sense.
It's $85,000 first year only. Wow.
Yeah, yeah. Yeah, so I think there are little tricks and tips that we could work on within this market to help still people get in and not feel the pain of the higher, you know, prices in most parts of the state, especially here in the Bay Area, and the higher rates that we've been seeing. So there are ways to get around that. You know, and we can always get clients into the best situation, always case by case, like I said.
Okay, any other tips that you have for buyers?
Yeah, of course. Anytime, I mean, I always say, don't ever hesitate to reach out to a loan officer. It's always good, even if you don't think you're quite ready, at least we could point you in the right direction, especially with your credit scores and maybe a certain situation you're in, like with your employment or something. I always give free advice and try to point people in the right direction, at least guide them on how they need to better prepare. And things like, you know, maintaining your credit scores, don't taking out like large amounts of debt, don't buy a car if you're thinking of buying a house. Those things will all work against you in some ways, where there's more debt than, you know, when you have less debt, you qualify for a little bit more on a mortgage, basically. And maintaining your payments on time. That's very critical, you know. That's making sure that all your payments are made on time, because lenders will be looking at that. They're lending you a lot of money, so they want to make sure that you're able to pay it back, you know, and those little things on how you pay your credit cards and everything else make a big difference or make a big impact. One other thing, I'll just throw this real quick. One thing we could do, because I know the cost of housing is high still in the whole state of California. You know, it's Bay Area, but there's beyond the Bay Area too, prices have gone up. We always start to get creative when we work with clients, and you know, obviously the goal, if they want to buy a house, for example, you know, their dream home, it's not always possible the very first time. So sometimes it takes, like, you might have to get in with a co-signer, you might have to get in with another family member and buy like a duplex, like a 2-unit property, get into a condo instead of a house for a couple years and then sell and upgrade. So there's a lot of little tips that we could do, you know, kind of get creative basically to still get into something and not continue to pay rent and become an owner, you know, and then we stay in contact 2-3 years from now. We can, you know, that's part of the plan to get you into the next home at some point as well.
Right. Okay, great. Thank you so much, Sergio. One more thing. Where are you located and how can people reach out to you?
That's a great question. So I'm physically, our office is in San Leandro, which is in the East Bay, next to Oakland and Hayward. I'm very accessible. We work with clients all around the Bay Area, all around California, and we can always meet face-to-face if needed. But most clients now, they like to do Zoom and phone calls and, you know, my mobile app and everything. So the best thing is just to reach out to me and we could schedule a time, whether it's on Zoom or if you do want to meet for face-to-face, I'm okay with that as well. 510-508-5528 is my number. I'll repeat it, 510-508-5528, and text me, call me, and we could, you know, guide you through whatever you need to get started on your home purchase, and we'll be with you all the way through to your, you know, final destination, which is when you get your keys.
I'll leave your information at the bottom so people can see everything, your email and all your contact information.
Wonderful, wonderful. Thank you so much, Norma.
I really appreciate it.